Bismillah ar-Rahman ar-Rahim. The last meeting, which is about chapter 2, we discussed the main differences between primary market and secondary markets. Okay, and how savers and borrowers traded securities, and we defined securities, what it means. And today I'm going to talk about the different types of securities. And securities generally classified into two main categories. Okay, so we have two main families in securities. We have debts and we have equity. We have debts and we have equity. What is the difference between debts and equity? What is debts and what is equity? What is debt and what is equity? Give me example just to digest the debt and equity. Yes.
Debts like
not debts, debt.
like
So
bonds.
this silent. Okay, debt.
Like bonds.
Not dates. Not dates. Debts. Okay, yeah.
Equity like stock.
So debts like what?
Bonds.
Bonds. Okay. And equity like stocks. Okay, so bond and stock. So the question again, what is the difference between bond and what is the difference between stock? Let's take the last row. Yes, last two rows. What is the difference between stock and bond? What is the stock? Yes. Yes, is ownership. Yes, is the ownership. Stocks represent an ownership. So this is why a stock sometimes called stockholder. Yes? Or shareholders. Shareholder. So equity, a particular type of equity is stocks. And stock represent an ownership of the business. Okay, now bond. Let's take the last row in this area here. Bond. What is bond? I don't need the definition of bond. What is bond? Why it is debt? Yes, you are right. Yeah, loans. Exactly. It's like you are borrowing the money.
Yes.
Okay, so borrowing here. Debt is like borrowing.
With interest rate.
Yes, borrowing money with interest rates. So a particular type, the main type of debt is bond, similar to loan. So bond is not loans, but it is similar to loans. Fine. Later on, when we will talk about what is bond, the in-depth understanding of bond, and in-depth understanding of. Okay, so again, so bond is a debt. So we borrow money from banks, from financial institutions, but equity here is an ownership. Can you drive other differences between debt and equity? Yes? You are right, but not longer time, have no maturity. Okay? Yes. Have no, see here, no maturity. No maturity. What it means, let's take this example and focus on this example. If you want to start up a business, if the company want to do expansion, you know what it means, expansion, okay? And they have two options or two alternatives. So this cost them $1 million, okay? they have two options or two alternatives: to borrow or to issue shares. Issue shares. To borrow through debts or to issue shares as equity. Okay, or to combining between them. Fine? Okay. If they decide to go through borrowing, so they will receive 1 million from the bank. Then what they will do? They receive 1 million from the bank. So what the company will do? They will pay back interest. Okay, interest and no, they will pay interest and the installments, a portion of the bond. يعني بندفعوا الفائدة وجزء من القرض أو جزء من البوند. Okay, so and the portion of bond. So it means they have to pay back the bond pre the maturity day. For instance, if this 10 years, so on the maturity day, they have to ensure that they pay back the bond amount, which is 1 million. So this is, they have to pay back. Now, if they decide to issue shares, okay, if they decide to issue shares, they will issue shares to the investors. Then investors pay 1 million to the project. Now, my question is, does the business have to pay back the shares?
No.
Yes or no?
No.
No. So it means no maturity. We don't have, as a business or as a company, we don't have to pay back the 1 million. Okay? So no claim that the business pay back the stock value or the 1 million. Because you are, as an ownership, you agree that to invest in this company for unlimited period of time. So instead of doing this, if you want to sell the shares, you can do it in the financial markets. But you cannot claim, you cannot ask the company, give me my money back. Instead of the interest rate that's paid for the debts, the stockholder receive dividends. So this is another thing. So here we have interest and here we have dividends. Okay. So it's again so here we have interest and here we have dividends or paying out. Dividends, when you hear the news, Bloomberg or BBC, they don't say dividends, they say paying out. Instead of dividends, they use paying out, okay? Dividends. Now, again, so the bondholder here receive interest. The stockholders here receive dividends. Now, my question is, again, does the company have to pay dividends? Okay, let's take this area, please. Does the company have to pay? No. What do you think then? No.
If they have profit, they will.
Listen to her. Say it again.
If they have a profit, they will
Pay out.
dividends and pay out to stockholders. But if they lost the shares will decrease, or they have
Yes.
the loss on zero.
She said no, which is right, and you said according to if the company makes profits, the company may. You are right, but not 70% or not 100% right. Why? If the
Maybe they can pay the dividends and maybe reinvest it.
exactly. doesn't mean that you are making profits that you have to pay dividends. Okay? Because companies, they have their own policies. They have their own policies. It's like building the debates on this way is like strength our understanding for the differences between the equity and debts. Now, let's summarize the story of profits. If we have a company A, and the company A make a profit, let's see $200,000, the company has rights. Who has right? The board of directors. The board of directors has a right to keep the profit for investment or paying dividends or mixing between them. This is the story here. So they have option, for instance, 100 dividends, 100 keep them, or 0. So here keep, here dividends. 0, 200, or in the opposite, 0, 200. This is the alternatives, and you may create hundreds of alternatives. So dividends here, pay 100 dividends, 150-50. You could say 40-60. You could say 30-70, or you could say 70-30. It depends on the business. It depends on the board of director decision. It depends on the investment opportunities of the business. Or you say, no, I don't need to to pay dividends. I will keep the profits. 100% keeping the profits. Or no, I don't need to invest for the long time. I will pay it out to the investors. So just to say, companies has right to keep or to pay out the profits.
You have that choice.
Yes, you have choice. Okay. So this is well, I'm talking about about the stocks. Particularly, I'm talking about the common stocks.
Yeah.
Common stocks or common shares. Okay. So can you see other differences between all stocks? Sorry? Leave the preferred. You are right, but leave preferred for now. Okay, let's ask you a question. Yes?
In the steps, we have the right of voting.
Yes, you have voting rights. Voting right of what? Voting right of what?
The company chooses if they want to.
Okay, we have voting rights of what?
To have the
You are right, carry on.
If the company want to reinvest the money or pay the dividend or invest in other project, the stakeholders.
Who? Say it again.
Stakeholders.
Not the stakeholders.
Yeah. Stakeholders.
Be careful. Okay, can you know what is the difference between
Yes.
stakeholders? Be careful. Okay, yeah, carry on.
They have the voting right if they want to reinvest or.
Okay, yes.
Stockholders have the right to elect the board of directors.
Exactly, yes.
But
You're right.
The owners of the debt can't.
Yeah. So the common stocks holders have right to vote to elect the board of director. However, the debts, they don't have right. They don't have right to. Okay. What other differences? Yeah.
in equity, I can sell my shares to have the liquidity of money
Yeah.
for others, but in this I can't.
Raise your voice.
In equity, I can sell my shares
Yes.
and have liquid money.
Yes, you
In
can
cash.
you can liquidate your money.
Yes.
You are right.
But in borrowing, I can't.
Yes, you are right. But it depends on the type of security.
Yeah.
For instance, if you take loan, you cannot sell it.
Yeah.
But if you use bond, you can sell it.
But my interest.
You can digest this. In bonds, you can do it.
But dividends.
Yeah, this is
more profit for me. Dividends, I can have will pay me back, but in debts I can't. It's interest. I always.
You are receiving interest.
Yeah, if
Okay.
I late for paying it back, it will increase.
Yeah, they may charge you a lot.
Yeah.
But be careful when we talk about debts. The main form of debt is bond. Bond, you can sell bond, like stocks in terms of selling. But you mentioned for a good idea, and which is raise to talk about the differences between bond and stock. Bond, when the companies face challenges or face some bankruptcy problems or issues, the debt holders or the bond holders are the first people, the bondholder are the first people to receive or to receive their money.
Yeah.
However, stockholders are only taking the residuals. Receiving the residuals. Okay? For instance, when companies decided to distribute the cash, the first thing they have to look at the creditors.
Yeah.
They have to look at the creditors. At the end, after paying the creditors, then they can pay to the stocks. They pay the residuals to the stocks. Okay? So these are the common stocks and bonds. Okay. So we said the stockholders, they have voting rights, residuals, dividends. Just try to train your ears on these terms. Okay. Now, in the family of securities or in the family of equity, we have common stocks and we have preferred. We already mentioned about common stocks. What is preferred stocks? Okay? What is preferred stocks? And why it is preferred?
Because they receive their dividends before any common stockholder receive their.
Careful. You are right. Again, receive dividends. There is no dividends. No dividends. Even if the author mentioned for this, the dividends is for the common stocks. But in the preferred stocks, there is interest. Okay? And this interest is based on the capital or based on the bar value of the preferred stocks. So you can say dividends, but I don't like from financial point of view, I don't like to say it's dividends. Okay? It is interest. Interest, and this is constant. Okay? It is not related to the profit. If you have higher profits or lower profits, you have to pay a stated, as you say, dividends or a stated interest. Okay? This is the preferred stocks.
So what is the difference?
Yeah, this is a good question. What is the difference?
Preferred
And
bonds.
bonds.
Yes.
Yeah, okay, this question is to the students. Try to think. What is the difference between this preferred stock and the debts. Try to think.
Or the owners of the preferred stock also have ownership in the organization,
They have ownership, yes,
but with limited liability to
but they don't have voting rights, which is similar to debts.
Yeah.
So this is
Similar.
similar to. So they don't have, they share with no voting rights. They share. No voting rights. Yeah.
The beneficiary stocks pay to its holder fixed amount of income every year, but the debts don't pay to it.
Say it again.
The beneficiary stocks
Yes.
pay to its holders
Yeah. The
a
interest.
specific amount
Yes.
or fixed amount of income every year, but the debts don't pay to its holders fixed amount of income.
No, the same. Fixed. Now I want to mention for the similarities. Fixed. Okay. Now you talk about similarities. Why it is? Preferreds is different than debts. See, preferred is similar to common stocks. We agree on this. Preferred also similar to debts. So it is hybrid. It is like homogeneous. Is in the middle, is sitting like this. This is the common stocks and this is the debts. Now, you are as a student, just take the similarity between this and to take the advantages of both.
Yeah.
Now, let's see, this is not mentioned, by the way, in the book. The similarities and differences. Okay. Let's see the preferred stocks. My question is, does the business have to pay back the amount or the par value of the preferred stocks? No. The question again, does the business have to pay back the value of the preferred stock? No. So it is similar to the common stock. You see? For instance, if you issue 1 million by preferred stocks, the companies have no obligation to pay back the money, which is similar to the common stock, but it is on the opposite of the debts.
Yeah.
In the debts, companies have to pay the bar value of the preferred stocks, have to pay the amount of debts. You have to pay back the loan.
يعني هي الفكس amount هي الإقليمية للبونكس ولا كيف؟
سوري؟
هي الفكس
يعني احنا اخذنا سند قرض. انت لازم تدفع القرض. تسده صح؟ طيب رحنا طرحنا سهم ممتاز. الشركة مش ملزمة تروح تسدك السهم الممتاز. The interest. And we have a story for interest. كمان الانترست لها story. The interest, look at the interest here, the fixed interest. You have to pay the fixed interest in debts. But you have right to delay paying the interest of the preferred stock
don't charge it.
with no charges. Delay it for the next year. You have to pay it. Careful. You have to pay it, but you have a right to delay for the next year. Let's see. For instance, see this counter. Okay. This year, you decide not to pay the interest of the preferred. The second year, you decided not to pay. Then you will pay for the third year. Okay. What should you do as a business? You have to do accumulative interest. Accumulative. Accumulative interest, it means I node plus 2 plus 3, so you pay the sum in the third year. You have to do this. Sorry? Accumulative interest, but not similar to the yes. For the previous year, you pay it for later in the next years, but you have to do this.
What the benefit of doing this? Why I
What-
have to pay it? So I
You don't have cash this year. Or the cash, you may need it for investment, for other investments. If you have this right, why you are not exercise this right? إذا إحنا عندنا هذا الحق ليش ما إحنا ننفذه? Why we are not exercising this? If you have cash, it's fine, you can do it. If you don't have cash, you don't need to pressurize on yourself. If you have other alternatives or other, sometimes you have cash. And you decide, no, this cash is for investment, not for paying the for the preferred stocks. Okay? See.
We as a preferred stocks, can we complain? Why?
Sorry?
Can we complain? Why?
Complain. You don't have any obligation to do this. No. Your obligation is you can claim to pay the interest, to receive the interest. Okay, that's fine. But you don't have ask when. So it is accumulative. And this is preferred stocks. It means you will guarantee to take this, but you don't know this year or the next year. But sorry, why? What is the benefit of preferred stocks if they have this?
The company have bankruptcy. They will sell its stocks or or the company itself, and they will pay them the first one.
No. Preferred stocks, as I mentioned, no claim to get your money back. It looks like the no maturity date. But the benefit is you secure to take a portion of the profits. You secure that. But in the common stocks, you are not guaranteed to take a profit or not. But for the preferred stocks, no, you are guaranteed. But the idea is when you can take this. But generally, it's like you have right to delay, but most of companies, they on time. No. They don't have voting rights. See here? No voting.
دكتور بالنسبة للتاكس الديت هي exempt التاكس ولا كيف؟ البونكس
في tax.
بالنسبة لقسط التاكس يعني.
tax.
الديت exempt التاكس but
It depends. This is a big question.
بس مش فاهم
Yeah.
كيف أنا إحنا خدناها في الانفستمنت.
Yeah. This is why the tax. The debts is cheaper than because it is subject to pay tax, and this tax is deducted from the expenses. Okay, but for the preferred and common, this interest is subject to tax. So it means it more expensive than this. Okay, so the
ما هو ده من الديفرنسز ما بين البونكس وال
ones with preferred and preferred. Okay, so this is the. Any question for? So we talk about dividends, claim on assets, types of securities, voting rights. Now the stock markets, this is the last part in this chapter. Yes.
When you talk about the right to delay the interest rate,
Yes.
This right is for the company, not for the holding of the
Preferred
The
stockholders.
company is right.
For the board of directors. Yes. The board of directors may decide, okay, this year we will keep the profit and the interest for the preferred stocks for the next year. And they do accumulative. Okay? But in the common stocks, they don't do the cumulative. They don't have to pay. But in the preferred stocks, they have to pay. This is why it is preferred. Okay? Because this is foundation costs, there are other similarities between the preferred stocks and common stocks. Preferred stocks may be converted into common stocks after a period of time. Preferred stocks. Yeah, after a period of time, according to the contract, may be converted into common stock. Preferred stocks, generally the wealthy investors holding the preferred stocks. Other differences, I'm not asking you to list about these differences because this is in the upper courses. Preferred stocks, the par value of preferred stocks generally is $10. But in the common stocks, the par value is $1. Okay? So there are other differences. Okay. Now we talk about the stock. The question is, where do you trade the stocks? In the stock market, yes. It means from where you buy the chicken, we buying the chicken from the chicken market. Yes. From where you buying the stocks? From the stock market. Which stock markets? Yeah, which one? We have different types of stock markets. We have organized and over the counter. Organized market is the well-known market. All people, they know about this organized market. For instance, the Palestine Stock Exchange is a good example of the organized market. It means the companies listed in the Palestine Stock Exchange are traded in the organized markets. Any companies is not traded or not listed in the organized markets is traded in the OTC market or over-the-counter markets. And a good example in the West about the organized market is London Stock Exchange and New York Stock Exchange. Careful, NASDAQ is OTC. Okay? New York Stock Exchange, London Stock Exchange, Tokyo Stock Exchange, Istanbul Stock Exchange, and Malay Stock Exchange, Malaysia, okay, and Frankfurt Stock Exchange, Paris Stock Exchange, Cairo and Alexandria Stock Exchange, Jordan or Amman Stock Exchange. So we have different organized markets. In the OTC markets, the companies are not listed in here, are traded in OTC markets. And we have the NASDAQ is the real example of which is National Association Dealers Automated Quotation. Okay, this is the abbreviation of NASDAQ. NASDAQ is electronic market, automated market. The New York Stock Exchange and other markets being face-to-face markets. But nowadays, the story is different. Now, there is a lot of similarities between OTC and organized. A lot of similarities. Now, it's like nowadays, both of them become like a hybrid market. Okay? Both of them become like hybrid markets. Okay? And you know, the Google is traded in the NASDAQ. Google is traded in NASDAQ. And NASDAQ, some people, they pay more attention to NASDAQ than the New York Stock Exchange because it is a very fast growing up market. So it includes more than 5,000 companies in this NASDAQ. And of the New York Stock Exchange, it includes 3,000. London Stock Exchange includes the 10th wealth of the world, or includes the 10th wealthy market in the world. يعني بتضم 10% من ثروة العالم في اللندن ستوك اكسشينج. لندن. عشر ثروة العالم موجودة في لندن. تصور.
يعني الاورجنايز اقوى من الاو اس سي.
Yes, but nowadays زي ما قلنا is like little differences between them. Try to go to Google and Yahoo Finance, go to these links, and try to quote any company. And I mentioned, I ask you to select a particular company and see how they quote the price, how they pricing the shares. What you will see, you see this chart, but it is not clear here. We have opening price, we have closing price, we have high, we have low. Just look at them. It's important. Bring it to you. Try to print it out next meeting. Print out. Yes, for your selected company. And see the quotation. I don't know if the net is here is working to show you. So sorry, it's not working then. So in next meeting, just go to Google Finance, write Google Finance, and I mention here. Go to this link, or this link, or MSN money, this or this. In your left hand, you see the quote. Okay, this. You see the quote. Now this is inside the box. Inside the box, write the abbreviation of your company. For instance, write IBM. Yes. Then after the IBM, you see IBM. Okay. Then the price is traded in the financial market, and you can read the prices. So just try to print out the page. Yes. Go to the prices in the front page. Okay, just do it, and then bring it with you next meeting. So far we finished this chapter 2, and on Monday we will start chapter 3. Try to just remind yourself by these key terms in the. Okay, so any question before leaving? Any question? So next meeting, chapter 3. Okay, and bring with you the quotation. Okay, يعطيكم العافية. تفضل. مناقشة.